It's a crypto sniper, that's right. Yes, coming at you. We are going to talk about Bitcoin. Bitcoin's big day today. Bitcoin's big day today. That's right. What happened today? Bitcoin ran 30K today. Bitcoin ran 30K today. We've had bears in our feed on Twitter. Was watching a YouTube on Gareth Solway over here with Danielle Cambone. And he was saying it's still a bear until it stays substantially above 30K. I was thinking to do my counter response to this as to why, because I actually quite like what I've seen of Gareth. Relatively solid, consistent, seems a likable guy. Was on Stansberry Research and saying still just a bear market rally for him. And I was like, how, why? And I watched his reasons. It's helpful when people have different opinions to you. It's actually helpful to check your biases. We have to build a bias. And we built our bias to bull, and we have our reasons, and I'm going to go over them again. And he had his reasons. So let's just listen to what Gareth had to say in his bear call. I'd been meaning to do this for a number of days. It was recorded on the 4th. I think I saw it on the 6th or 7th. And of course now actually events have caught up and superseded. Listen to
which traditionally would follow suit has not really. It's been stuck in this price range. Break it down for us.
Yeah, absolutely. So normally we see risk on being something that drives Bitcoin up, but over the last month with the banking crisis, we've actually seen risk off be a positive for Bitcoin. So this kind of a weird thing where Bitcoin people aren't sure, wait, which one is it? Is it a risk on asset or risk off asset? And right now the price action is telling us it doesn't know, right? I mean, we're even seeing the banks selling off a little bit today, and that's not even driving Bitcoin to the upside. So the biggest thing to do here is look at the chart, and I think the chart really tells us a lot about where Bitcoin is relative to where it could go. So if I zoom out on my chart here, and this is amazing, we're going back to the levels that were the lows during the bull market. And that's where Bitcoin is hovering just underneath. And so if you think about it on a psychological basis, this is like the Great Wall of China. I mean, this is the epic wall of Bitcoin's price action. And so that explains a lot why it's having so much trouble breaking above this $30,000 level. So for me, when I look at this, I stay bearish or a suspect in terms of whether or not the bull market is back on in Bitcoin. I'm still favoring the fact that we're still in a bear market in Bitcoin until we get over 30,000 and hold above it. Because right now, this is the line in the sand. And if Bitcoin can't get through this, it's still bear market central.
Right. So talking about bear market, because the last time you were on and other times you've been on, you spoke about 12,000 or lower for Bitcoin. Have you canceled that out? Have you had a change of heart on the bearish front?
Yeah, I'd love to say I have, but I haven't yet. And the key is this level, right? So if we did get above 30,000 and we stay there for, let's say, a week or so and establish ourselves back above that level, I think at that point, then I say, okay, listen, we're back above the psychological lows from the bull market of 2021. Now I think the low is in. But as of now, to me, this is a run-of-your-mill bear market rally. If you go back to 2018, 2019, we had periods where we were up 100 to 200% off of the lows in Bitcoin, and yet we still came down and retested that 3,500-ish low. So you can't get too excited yet when the technical level that is the huge wall in Bitcoin hasn't been broken yet. So I'm sticking with 12 to 13,000 and maybe as low as 9,000 as of now.
Okay, so look, Gareth, I know I get it. You're a technical guy, right? But
So she's going to get on and talk about the fundamentals, which is interesting because he was a bull gold. And the interesting thing is gold is doing well right now because fiats absolutely suck, and the god market of fiats is coming under question, is being undermined, and that doesn't make the yuan and the euro strong. It makes the entire categories of fiats weak. And what is gold? It's an alternative to a fiat-based system, which is printing of paper under proliferation, creation of debt, particularly loaned to the privileged banking sector and cartel that live like hogs. And we have a two-tiered society with government throwing obscene amounts of money at the military-industrial complex, while the retail consumers facing job losses, increased prices in energy, inflation, and further taxes apart from the inflation. And there is a mass scale of poverty where they've gone from being a one breadwinner to two breadwinner families that are now more poor than when they were a single breadwinner and the mum was to stay at home. So here's where we are. Gold, how can you be the bullish of the gold but then withhold on Bitcoin? One of the key things, he showed a couple of lines on this, and the one thing I will say, not to or about Gareth, I think he's solid, but just technical analyst generally. Imagine looking at my sketch pad as an artist, and I've done two squiggly lines like in a cross. And then there's the next page, and I've tried the same two lines at a slightly different angle, and that's my drawings. Imagine you go to a workshop and there's no shavings on the floor, there's no tools everywhere, there is real work going on. Our charts are a mess because we are looking at multiple time frames and many things, and I think people underchart. They truly do. They don't do enough drawing. They've got to look at every single pattern that has ever had some significance. For example, when Gareth talks about the 30Ks, right, 30K is significant, but where was his interest in the 25K? The key level that was rejected over here, here, and there, and gave you the inverted head and shoulder. Where was that interest? He's missing something. We've done more deep dives. Where are we today at this level? The key level that we have just run, wait for it, watch and see. This is a line nobody else has on their chart. Is right there. You ran today that purple line, which was the head and shoulder target of the 64,000. The 64,000, my friends. And that was the real high. I'll be showing you in most crosses. Not in dollar terms. Remember, dollar becomes part of the story. Yes, you made 69, and technically that is higher. But in Bitcoin against gold, Bitcoin against the NASDAQ, that was the high. That was the seminal head and shoulder. That was your target on the first cup gold nugget. That's right, 56,532 from longs put on at $9,000. That was an amazing exit on a left shoulder of a head and shoulder. We were here saying this falling wedge will break to the upside, but first you had to make that target. It was made a couple of times in the end, 3 times in total. That was it, 30,264. You have now bumped into and been short-term resisted at that level. That is a run of that level. That level does run straight through that bear flag, from corner to corner of the flag of this downside journey that took you all the way down there for the 3 arrows capital and the hedge fund failings, all of which that occurred. You should have the 25K. It's one of the most critical. You should have the 42.5. You should have the 47.5. That goes hand in hand with the head and shoulder that was over here that gave you the low. This is the best call for a bottom that you've ever seen in your life. From the primary, this was the dollar high head and shoulder that got generated here. This is a log scale. That's why this looks so long. Bang, right there on the wicks. 15,000 and a few hundred. That was the bottom. So many things pointed to key critical cluster of targets all being made at the very dense level. We spoke many times of the 15 and the level here, this level on the flag as well. These were such seminal levels. What number was it again? Remind me. Over there, 17,000. 15,000. There was a real density of key levels. There was, of course, the legacy high of 19,800 and the 20K level that gave you the right shoulder bottom flag. There was this broadening structure that had to be broken. You got that spill for your right shoulder that got some people in our community. That's right. Click the link below, book a call on the sub 20K entry that is now touched 30K, already 50% move. We've said to you the 40 is a target, but you could after a pause go there. We did for you the analysis on the Bitcoin dominance over here. We said 47.5, you will break, we said, out of this, and it will be continuation to the upside, and you will need to run the 47.5. You got a continuation pattern here, and you finally did your 48.17. That goes with all the other dominance, localized highs that were around. And this time, it does look a little bit different for Bitcoin. This is one of the strongest moves up. Why, you say? Because people aren't looking for a sexy app on the blockchain. They're wanting an alternative to fiat money. They're done. As they see the dollar come under attack, they're done. They want real hard money. They're going to go to the most liquid, the longest standing. I warned you, the maxis are going to become insufferable during this period, because this is the theme for Bitcoin. This is that theme. If we go for the monthly on this chart and have a look at this, we said this as well. Look at how beautiful this move is. You are looking at, in a granular basis, a major W bottom on Bitcoin dominance. There should be a neckline drawn in there with a substantial move to the upside. Why? Because, again, people want the most liquid, non-printed, restricted in 21 million, can't be further proliferated for now, we hope, that can serve as digital money alternative to the fiat failing system. The Chinese yuan, dealing in yuan with Brazil, is not good for the yuan and real as much as it's terrible for fiats. The god market of fiats is the dollar. It suffers for that. It suffers for that. The fiat system is seen to be suffered. They've been borrowed into existence. That is what's bringing heat into Bitcoin. And you could be looking at a Bitcoin dominance. We've done all the crosses for you, countless times on many different videos. Not all of them on every single video because not enough changed. We did the crosses of Bitcoin against the NASDAQ for you. And we highlighted on the weekly time frame and on other time frames that you have broken out. You have broken out of a falling wedge. This is it. Go back up to that monthly again and pull it through for you. You've had 1, 2, 3, 4, 5 months in a row of overperformance of Bitcoin to the NASDAQ, and you have broken a falling wedge. When will people say Bitcoin has turned? As a cross-market analysis, this is a breakout. This is a breakout. This is a breakout to the upside of something that did exceedingly well, ran the second interim, has had a pullback and is now going again. All still as part and parcel of a first cup gold nugget trade. That is a 2.5-year continuation pattern that formed in the cross-value analysis of these assets. We've done the same thing for you against gold, the traditional value that I've mentioned a couple times. You can buy gold on the links below. You can also buy Bitcoin and trade Bitcoin long and use Bitcoin as collateral on the simple FX below. You can do all these things, but don't overdo it because I got a warning for you as well. You should be at minimum investment long. This is against gold. 1, 2, 3, 4 months in a row up. I told you last month that this was one of the best candles you could hope for. A test to the downside, entirely rejected, returned to where it opens and smashes backwards with a further extended candle body away from the open in exactly the opposite direction. This is the classic look one way, go the other way candle. It is a real resistance of lows, and that was your 19.7 lows, and that was a couple $100 lower than where some of our community members got in long in this new investment Bitcoin bull market. This is good, guys. This is the one area where we're going up. People were asking me on Real Vision today, where am I most excited and what's the S&P? I don't care about the S&P. There's a lot of rotation, military industrial complex up, retail stuff down. There's a lot of churn. It's a broad index with a lot of underperformers, overvalued, some that will still go up because of inflation, etc., etc. The anti-fiats are your trade right now to the long side. Gold, Bitcoin, the God markets, and then silver, the alt markets will follow, and then the miners in the miners will follow, and the more spec cryptos will follow as well. That is going to be the firing order, same as it ever was, same as it ever was. You just have to not lose your head and recognize that a reversal has occurred and others are not yet prepared to see it. And, you know, people got upset with me with my perpetual beardom. I kept saying it, but I'm going to keep telling you what I truly, truly see. I ain't going to moon call to get you to come on board. You know, we've said countless times. On the monthly, I pointed out this beautiful candle. You've got to look at it again. It's even better there when it's the body is bigger than the wicket tested to the downside. And it closed very, very close to its final high. This is likely to be a strong continuation candle when it's done. Although You have one small warning that I will put to you, but you want to bias long, investment long, and selective opportunities leverage, where you can quickly make good additional weighted gains if you know what you're doing. And that only way to do that, click the link below, be part of our community, and see when we do it. And the pinch on that risk must be super tight. The size must be calculated. You write the check for it, and there must be many R's in multiple of return that should exceed. That is the way you do this. This is a great, great chart. This month has still got days to go. We're only 11 days in 30. There's 2/3 still to come. The better part, at least of 60% to still come, 65 odd percent. So that is a phenomenal move for Bitcoin. People are sleeping on this one. By the way, it can still go further down. Let's just highlight, this was a 2.5-year continuation pattern. It was kind of unique, but bear markets have typically gone, what's the final high? That looks like the final high, 1175. What was the high there? 1171. So bear markets, December 13, you'd have to say it was ended August 15 or Jan 15. So let's take this one. You did actually have a gap low that should be the low if I took the low. But let's say, hang on, we'll just leave that wick as a sketchy moment, probably Mount Gox or something. Let's go Bitstamp, in fact, and get more history and a little bit less crazy wicks. So December 13, the low, Jan 15. That's about a year. It's about a year bear market. December 17, low, December 18, about a year. How long? This to me was the actual high, in my opinion. You got just FOMO rally that just made a marginally higher high in dollar. Dollar was particularly weak. And it went higher. It was lower against gold. It was lower against the NASDAQ. But let's take the actual dollar high, just because this is a dollar chart. November 21, and where was your lows? These two. Well, actually, that's your final low, November 22. But you were still in the doldrums December, and you only started to move January. So, you're at least a year bear market in this. And if you went back to here in April 21, man, April 23, that's 2 years ago. So you take these 4 months off 2 years, you're 20 months into a bear market if you did it like that. So the time is ripe too. And the story has come. The great unraveling. Bidenomics, the destruction of the dollar is here. It is absolutely here, here, here. They are laughing. The Kenyan presidents are queuing up to mock about how the dollar is in deep, deep trouble. People don't want to buy the debt anymore of any nation, and much less so also treasuries to a much lower degree. If we have a demand-destroying event, yes, you could have a bit of a bid come out and go back into the markets for sub-debt, but it'll never get what it got in the COVID era. And that's what I'm here to tell you. These are the key moments. And for that, you click the first link in the description below. You book a call. By the way, the cloners are out on our crypto profile, Twitter profile. Also, the guys on the comments in the YouTubes. The only way you engage with us, you go to the Market Sniper and you book a free call. There's lots of free information, free trading course, previous results, lots of information for you to see. If you book a free call, there's a short video that you will get access to. As well, you'll get a diary, you choose a time, you will get a friendly face to talk about your crypto interests with, in terms of what we do, when, and choose a time that suits you, and you could potentially join our community to maximize the wealth potential of the fiat system failure by focusing in the right places, the anti-fiats, and rolling in firing cylinder order from the strongest to the next stage, who will be strongest to get the biggest round. This could give you an absolute multiple, 10 or 11 times over the standard hodl guy that just sits in, even if he's looking at the right place and putting new money in there. There is wealth building opportunities in the greatest crisis every time. You should take delight in it. This is a secular piece of history that in hundreds of years they'll be talking about as economic history, as long as we're still around. I'm telling you this, you are living it, and you can build wealth just by positioning correctly. And I'm not talking about day trading, jumping in and jumping out. I'm talking about occasionally refining and pivoting a portfolio. You should be, of all your cryptos, you should be at least 66% Bitcoin now, if not 100%. Yes, we've all got a few speculative projects that we think could do well, but generally you should be weighted in Bitcoin. And we will be turning you into those alts, the best ones, at the right times when the structures show. The dominance says Bitcoin remains dominant. This is a failure of money and the perception of the fiat and debt system. The death of the dollar is a downdraft on all currencies, even though they will get bid up in dollar terms. The real winners are gold and Bitcoin. Anti-fiats. Have a stable of horses, not just the fastest horse. These are core principles that we have espoused from here when others have said less smart things about overly being biased in single tokens, etc. Be smart. Be smart. Have breadth and depth. Okay, you know what to do next. Book a call. Bitcoin strong. But that threat, I didn't finish on the threat. This is your warning though. Inside all of this, your warning is the one thing. We have had 3 surges of upside. 3 surges of upside. 1, 2, and this is your weakest and shortest so far. 3, and the warning that I'm giving you here is you are making structure. You got a deep pullback here that turned into a falling wedge. That was part of the megaphone structure that gave you your right shoulder where your stop is. By the way, we have levels. Congratulations to Gareth for having a level. He spoke clearly. 30K was his level. He then added a bit of a timeline, and that's a bit fuzzy. How many days, weeks, for how long? Price behavior goes the following way. First, it's resisted at a level. This is kind of being resisted at that take profit on the head and shoulder short from the real high, the 64K high of Bitcoin. What's it do? It resists, it pulls back. Then it breaks and straddles, trades a bit above the level, a bit below the level, a bit above the level, a bit below the level. There's your key level. And then it breaks above it again, and then it comes down and supports on it. Comes down and supports on it, and then it goes and never sees that level again for at least a long time. That is how price behavior structures slowly overcome key levels of significance. What you've had is you've had a bull surge that came off very low volatility here. That's number 1. You got a secondary surge. This has been a little bit sideways rather than a down move, and this move is smallest of them all. So what you start to get, this is your warning, if you wade in, leverage long now, without thinking, you could find yourself getting into the top of a rising wedge. You could pop out the top, everything's hunky-dory, we could see 32, we could see 33, and then you have your first of a meaningful pullback since this pullback. Now, we are wrong if that level runs. The minute that level runs, the inverted head and shoulder pattern has been invalidated. A return move to 25 does not make us wrong. That's actually very normal and natural price behavior. So the 25K runs across through there. Be warned, if you jump in now after the third and weakest, we talk about the magic of the number of 3. If you jump in now after the third and weakest move up with also the weakest pullback, didn't have much of a pullback here, consolidation. This had much more selling out, the bloodletting was released, the pressure was released inside that sell-off, and you actually had a final capitulation there, and that allowed you to snap with real vigor. You've had only minor sell-offs now, minor sell-offs. You can go and put speculative orders. You can go and put speculative orders in these areas. The neckline just below it up to 27.5 potentially, and you could get a dip back. There could be always news in and around that. That's your warning. It's not the time for leverage trades long. Do not ape in and say, that's it, Francis says 40K, 42 and a half, possibly all the way to the moon. No, it's never a straight line journey. It's never a simpler story as that. So you need patience, and you've had 3 surges, and we're going to potentially complete a third impulse to the down, on a down leg here. And that could set up the rising wedge breakdown. That will not see me become bearish. The only time we invalid and I reconsider my view is the run of the 19,900, 700 level. Okay, does everybody understand? But you may get an opportunity to reload on the bull scenario with limit orders in the blue box that I have highlighted. Bitcoin is outperforming the NASDAQ. It is outperforming and overperforming gold. It has had 4 amazing months. This is more than just a rally in a bear market to all those that say it. However, you've got to time it correctly. Click the link below in the description, the very first one, and book a call. Catch you later. Thank you for watching. Play safe out there. There's going to be an amazing sequence of events. You have a unique opportunity to maximize your wealth during this period.